Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 840th edition of Short-Term Trading Live with Oscar. Traders, I am in New York City in my New York City digs, and I am coming to you from the Big Apple, and I am telling you this. About 3 or 4 days ago, I did a video for you, and in that video, I said Omni is starting to call the top in bonds. It looks like it's right about here. We have a big rounded top, and it looks like it's about to crack. Traders, the bonds have cracked tremendously. We were at 141 and change in the bonds for that video. We are trading at 135.19 in the bonds as I speak. That's an incredible break. That tells you that tens and tens of billions of dollars is coming out of bond funds, and traders, there is no real other game in town to put it into but our U.S. stocks and our U.S. stock indices, and that's why the dollar is going up right now, because they're selling assets, getting U.S. dollars, buying those U.S. dollars, and using them to buy U.S. stocks. This is going to continue likely straight through May, if not longer. No market goes straight up. You get your pullbacks, but this market looks good. This video is being filmed on Wednesday night for trading, Thursday, March 15, 2012. Traders, as we know, futures trading can be extremely risky and cause substantial financial loss. If you do not understand this game, if you do not use stops, and if you do not have risk capital to lose, you certainly shouldn't be trading. But traders, we have a green Omni on the board for U.S. indices. I like buying the dips. I think that you need to buy the dips in the S&P, in the Nasdaq, especially with the bonds coming off. That money is going into U.S. stocks. I'm going to show you a couple of charts right now I think you'll appreciate. Traders, if you like the charts that you're looking at, simply come on down to livewithoscar.com, jump into my free trading room, and allow me to help you view the charts in the way I'm about to show you. With no further ado, let's go look at some charts. Okay, traders, in the last few videos over the last couple of weeks, I've been telling you that the Omni has been trying to call top in the bonds, and we were very close to calling top. Well, look at the bonds now. Just 3 or 4 days later, we were right here on that day that we were talking about calling top in bonds. We have a rounded top, as you can see. The bonds have broken severely. Now the bonds are below the 200 bar moving average. This chart looks like it's going to go much lower. Traders, if the bonds are going lower, there are tens and tens of billions of dollars that are going to have to be poured into another market, and that market is most likely going to be this one. Look at how bullish the Nasdaq is right here. That is an extremely bullish channel. Nasdaq has been leading the way throughout this entire rally. It looks to me like you can go at least through May on an extended rally here. No rally continues straight up. You always have your pullbacks. But traders, I gotta say, this looks like a really, really strong market. You must buy the dips in a bull market. When in a bull market, you buy it until it hurts, as they say. If it doesn't hurt, you continue buying the dips. If it does begin to hurt, you reevaluate your strategy. Until then, traders, buy the dips in U.S. indices. So, traders, you've seen the charts. There's my technical argument for why we've got the green Omni once again, and we are buying the dips in U.S. indices. Traders, remember to keep your emotions out of this game. Place your stops. Place them first. Once your stop is in, your emotions can be at bay. You know where you should likely lose if the stop gets hit. So don't let your nerves make you start changing stops and getting in and out constantly. Come up with a trading plan. Trade that plan the next day. Put your stops in first. Sit back and watch the analysis work. Traders, the other thing you can do to keep your emotions out of trading is to say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Yeah, buy the dips video 840, looking for that 1540 to 1570 mark in the S&P as a minimum high this year. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.